Shares of Maersk are up more than 11%, about 11.7% this week, as investors have new hope that that 90-day tariff pause turns into a real deal. Joining us right now is Maersk's North American president, Charles Steene. And Charles, thanks a lot for coming in.
Thanks for having me.
I would say a lot of people feel like they've been put through the paces the last 6 weeks trying to figure out with the tariffs, but your life may have been a little more complicated than most. It's your entire business. What happened from, let's say, April 2nd through yesterday?
I think it's safe to say that the last few weeks since Liberation Day have been volatile, to put it mildly, across the entire industry and across our entire portfolio. So tariffs were introduced, tariffs were changed, tariffs were postponed, and in some cases within just a few days of distance. So we've been working very closely with our customers in that same period to find solutions for their respective supply chains, to make sure that we either pause, because most of our customers will pause their supply chain out of China, or redirect to different destinations away from the tariffs that they would be implied with.
So what did that mean for the ships you had on the oceans at that point? Were there stoppages? Were there speeds ahead of Inauguration Day or ahead of April 2nd to try and get things moved through? Like what did it look like on the ground?
Now, if you look at the immediate impact of the Liberation Day tariffs and the weeks afterwards, it's been an impact specifically on the China to U.S. trade.
Which affects how many ships for you?
It's 5% really only of our global network. So we've seen a reduction of approximately 30 to 40% of the flows into the U.S. So 30 to 40% lower volumes in the course of both April and May. But if you take a step back, you'll realize that that's only 5% of our global network.
Okay.
And if you look at the global network, which of course covers also other trades in and out of the U.S., including global trades, normal growth has actually continued. Trade has continued. And in some of the trades, you've seen some substitution. So the growth has actually been more robust. So while the impact is big...
It was shifting things around, but it didn't have a huge impact on your bottom line.
No, at this stage, it's not contaminating any of the other trades.
So how did you deal with that, though? I would imagine that ships had to be put on entirely different paths, entirely different transit paths for all of these.
What you would have seen in the industry, it's that approximately 25% of capacity has been taken out of the industry, specifically, again, on the China to U.S. trade. Mm-hmm. Now, that comes in different flavors. One would be to simply take vessels out, to take ships out, which would then be redirected to other trades. In our case, we've been able, because of the new network that we've deployed, to not necessarily take ships out, but to swap them simply from a bigger ship to a smaller ship and reduce our capacity as a result. And right now, when we look at the current reprieve, the exact same thing will happen, but in reverse. So we're ready to now swap smaller vessels back to bigger vessels and reintroduce capacity on the trade out of China.
What is the new system that you've put, the new network that you put in place, a new technological system that helps you do that?
It's not so much a technological system. It's a modular network that allows us across our 700 vessels across the globe to make sure that whenever disruption occurs, we're able to isolate it in a single location and be much more nimble to then react to that disruption and allow both for our service to remain consistent, in this case, to continue ships every single day from Asia into the US, but simply take smaller vessels and as a result reduce capacity without impacting services.
Smaller capacity because there's just less trade that's going back and forth across?
That 30 to 40%, of course, requires a smaller capacity to serve it.
Is that something that your competitors are doing as well, or is that an advantage over them?
It's a big advantage, I would say. Competitors mostly, or our peers in the market mostly, have taken ships out, blank sailings, as we would call them in our industry, which really roughly means that this week there will be no sailing, but there will be a sailing next week. So the consistency of service gets impacted. The effect is the same. Capacity is taken out of the actual trade.
I would assume the longer that capacity is taken out, the more difficult it becomes, the longer it takes to get it back up and running when there's a restart, just finding the crews, putting them back together?
It's actually not that complicated, but I would argue the main challenge today, as we speak, as the details of the reprieve become more clear, that over the next 90 days, there's clearly going to be pent-up supply that sits in China that needs to be reintroduced to the supply chain and get towards the market here in the US. So to bring capacity back in for vessels that have been redeployed elsewhere will be more difficult. In most cases, those vessels will be waiting for the reprieve and actually are, within a few days, available again to ship.
I mean, it's kind of amazing if you're looking at your one-year chart. You're still up 14% over the last year. There was that huge drop-off on April 2nd as everyone reacted to the tariffs that were put in place. How do you prepare for any and all of this? Are you still making the same sort of CapEx investments that you would be making in new ships that come years down the road? Does any of that change?
I would say nothing at this stage changes. I think the uncertainty that sits in the market is one that is time-bound. There's an expectation that, of course, within weeks, there will be more clarity. There will be more clarity on both, will the 90-day lead to a permanent deal, not just with China, but with other partners, which means that the uncertainty that today stifles the entire industry, including ourselves, for the bigger long-term decisions will be gone. And as a result, your long-term CapEx decisions will also be reintroduced in the same way as they were before.
I wonder if you can just suggest or explain what's happened with the trade in Southeast Asia. A lot of things have changed since COVID anyway. There have been supply chains that have been shifted and put into other areas, whether it's coming from Vietnam, whether it's coming from India or another country. How have you all seen your trade patterns change, let's say since 2019?
The big change, and you've actually touched upon it, that we've seen over the last 6 to 7 years is really one of recalibration of the supply chain across more origins than just China. Of course, most of our largest ships within the US had big exposure to China prior to 2019. So the main shift, the main macro dynamic that we've seen is indeed Vietnam, it's Cambodia, it's Bangladesh, it's India as a China plus one, a China plus three, or even four, to make sure that any risk is mitigated to a larger extent to more origins, and that shift continues.
There have been all sorts of accusations and some proof in some cases that China is stuffing those channels, sending things to China and then passing them back on through. That's part of the reason the tariffs were higher there. Do you see that with your shipments, things that are being shipped there and then turned around and come back to the United States ports?
No. At this stage, there's no reason for us to believe that that's actually happening.